Defying global surge, China's manufacturing facility inflation hits 14-month low. Beijing, China's factory gate inflation cooled to its slowest pace in 14 months in May, depressed with the aid of susceptible call for metallic, aluminium and different key commercial commodities due to tight COVID-19 curbs and bucking the worldwide trend of swiftly accelerating expenses. The Manufacturer Price Index (PPI) rose 6.4% year-on-year, the National Bureau of Statistics (NBS) said on Friday, after an 8.0% upward thrust in April and in line with forecasts in a poll. It became the weakest analyzing given that March 2021. The Customer Fee Index (CPI) received 2.1% from a 12 months in advance in May, in step with April's boom. In a poll, the CPI changed into predicted to upward thrust 2.2%. The cooling inflation marks a pointy contrast to decades-high readings visible in other foremost economies and displays the slump in demand because of China's strict COVID-19 controls, which has chilled factory and retail interest in latest months. The modest price pressures also permit China's primary financial institution to release greater stimulus to prop up the economic system at the same time as economic authorities in most different international locations scramble to hose down inflation with aggressive interest rate hikes. Factory gate inflation will retain on its downward trajectory for the duration of the rest of the 12 months, stated Sheena Yu, China economist at Capital Economics. Further policy charge cuts earlier than long, the primary of which would possibly come as soon as next Wednesday, she mentioned, referring to the People's Bank of China's medium-term liquidity operations subsequent week. The world's second large street economy has slowed drastically in latest months, hit with the aid of strict COVID-19 controls, disrupting supply chains and jolting manufacturing and intake. China's covered in past due May announced a package deal of 33 measures protecting fiscal, economic, funding and business policies to revive its financial system. Last month, significant COVID-19 lockdowns closed factories and shops, choking purchases of metals-intensive products from vehicles to appliances. Chinese auto income grew in May from April, however were still down 16% year-on-year, in step with the Chinese Passenger Car Association. The urban jobless rate rose to 6.1% in April, the highest considering the fact that February 2020 and nicely above the authorities' target ceiling of 5%. Non-food charges rose 2.1% from a year in advance, 0.1% factor slower than the previous month, affecting the CPI by means of approximately 1.68% factors, the NBS stated in a separate announcement. On a month-on-month basis, CPI fell 0.2%, swinging from a 0.4% upward thrust in April. The CPI inflation remained strong. The rising commodity expenses had been offset via susceptible provider charges along with journey and entertainment, stated Jiwei Zhang, chief economist at Pinpoint Asset Management. The transmission from PPI to CPI has grown to be muted, because of weak domestic demand. Beijing has taken a chain of measures from reducing benchmark lending rates to permitting delays on mortgage payments to arrest the monetary slowdown. Goldman Sachs (NYSE) GS closing month decreased its 2022 increase forecast to 4% from 4.5%, underneath China's professional goal of around 5%.